Welcome to Illuminati Silver. We tell it the truth about silver. Today is Wednesday, the 18th of December 2019. And yesterday we produced a video entitled Gold and Silver Range Bound, but may break shortly. And the day before, two videos, one entitled Equities Rise, So Does Gold and Silver, and Brexit, Elections, Democracy and the Media. And we've placed links to all three in the description box below. And they're all quite relevant to what we're going to discuss today. Now, for some time, we predicted that once the outcome of Brexit became clear, we would see sterling rise in value, especially against the euro and the US dollar, thereby causing gold and silver prices to fall in sterling terms. And up to and including Boris Johnson's Conservative Party election victory last week, this is exactly what has happened. We have seen sterling rise from just under $1.20 a couple of months ago to as high as $1.35, and gold and silver falling back some 12% and almost 20% as far as silver is concerned since their peaks in early September to today. However, this may all begin to change as far as the sterling price of gold and silver is concerned. We mentioned in yesterday's video that gold and silver are both at a technical pivot point where, in US dollar terms, the price could fall back or rise with almost equal levels of probability, especially in the very short term, that is, during the next few weeks. However, in sterling terms, the position could be very different. Firstly, let's read to you an article published by Bloomberg this morning. Bloomberg article entitled Sterling Has Neither Politics Nor Technicals Going For It by Vasilis Karamanis and Ruth Carson, December 18, 2019. Euphoria over Prime Minister Boris Johnson's landslide win sent it to the highest close since March on Monday. A day later, it suffered its worst sell-off in more than a year after he announced plans to set a Brexit deadline of December 2020. It lost as much as 0.4% against the dollar on Wednesday. To make matters worse for cable, it completed a technical pattern that suggests the rout probably isn't a blip. The so-called evening star candle pattern, which forms over 3 days and uses the currency's intraday highs and lows to show a sudden shift in sentiment, is sending early warning signals. There's more. Risk reversals, a barometer of market positioning and sentiment, show the premium investors pay to bet against the pound have more than tripled since December 16. And the pound's 1 year implied volatility briefly extended its biggest jump in 13 months. Quote, the market is coming to the realization that Boris Johnson actually means what he says. Brexit will happen no matter what, unquote, said Mingze Wu, a foreign exchange trader at International FC Stone in Singapore. Worsening developments could push the pound down to as low as $1.20, he said. Johnson plans to put the divorce part of his Brexit deal to a vote in Parliament as soon as Friday. His pledge to leave the European Union with or without a trade deal spurred traders to increase bets of a Bank of England rate cut by the end of next year. Money markets price an 80% chance of a rate cut by end of 2020 versus 45% on Monday, while the yield on 10-year government bonds dropped 1 basis point to 0.75%. Data Wednesday showed that UK inflation held at its lowest rate in 3 years in November, providing ammunition for interest rate doves as the Bank of England prepares to announce its final decision of the year. Quote, the UK economy is looking pretty grim, and the economic uncertainty is set to last for all of 2020, unquote, said Marshall Gittler, a strategist at ACLS Global. Quote, I wonder how long it'll be before some members of the Bank of England's Monetary Policy Committee start talking about the possibility of rate cuts." End quote. The currency traded at $1.3098 as of 10:58 a.m. in London and was slightly lower against the euro at 85 pence. So, certainly as far as the authors of this article are concerned, and the traders with whom they've spoken, sterling is not looking at all that healthy, especially while the prospect of a hard or near-hard Brexit from the EU is still a possibility, and it may be, as already mentioned, another 12 months before all of the fine print has been signed, sealed, and delivered. Now, this could still all be a negotiating stance by Boris Johnson to exact the best deal and a hard-nosed Brexit, where the UK simply walks away and utilises WTO terms, may never come about. But while that uncertainty persists, sterling will undoubtedly be under pressure. Now, on Thursday, tomorrow, the bank's 9-member Monetary Policy Committee, which is responsible for setting the interest rates for the United Kingdom, will announce its decision. It is expected to hold rates at 0.75%, despite pressure from some quarters for a further quarter-point cut. Now, if it actually cuts rates, then clearly it will be sending a very severe warning about the UK economy. And if it doesn't, markets will expect it to do so quite soon. Now, we've often stated on this channel that whilst we were in favour of Brexit for the UK long term, we also fully appreciated that economically it will prove difficult for the UK in the short term. And it looks like this is what is going to happen. Now, the point we're making in this podcast, though, is that a weakening of sterling will prove beneficial for gold and silver prices, which currently stand at £1,128 for gold and £12.99 for silver. Now, having already received a 12% and 20% drop from recent highs, if sterling falls back to $1.20, then we should not be surprised at all to see gold add another £160 an ounce to its current price and silver £3 an ounce to its price, almost regardless of what happens in US dollar terms. That at least is our position on the situation, that we are very bullish gold and silver in sterling terms over the next 12 months, taking into account the points we've just made. And almost, not totally, but almost regardless of what happens to them in dollar terms. So subscribers, please take note. In conclusion, we appreciate that the majority of our subscribers come from the United States, and that the sterling value of gold and silver is less important to them than it is for our UK subscribers. However, it is also important for all parties to be aware of what is actually happening to each country's relevant currencies, and a weakness or a weakening of sterling on the international markets, and especially against the US dollar, can mean, and often does mean, that funds flow out of sterling into the dollar, making it even stronger by comparison yet again, and thereby potentially pushing gold and silver prices down in US dollar terms. So these effects and relationships are very important to US citizens as well as to those in the United Kingdom, especially if one is accumulating or investing in gold, silver, and other commodities priced in US dollars. Thank you so much for listening. If you haven't already done so, kindly subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.